welcome to another episode of Allica's Brokercast. This is my first one in the hot seat, so you have to bear with me. But I'm joined today by Luke Veale, who is our Senior Central Relationship Manager. I'm Steve Spinks, I'm Head of Sales for Allica Bank, and we've got some really exciting announcements for you today that we want to talk to you about. Obviously, Allica is very well known for our relationships with our brokers, for our speed of service, and for being clear and concise in the way that we underwrite and complete cases. But we've got some really exciting product news coming down the line that we want to share with you today. So, Luke, would you like to just tell us a little bit about what we're going to do, how we're going to do it, and what's on offer for these brokers and for our SMEs?
Absolutely. Thanks, Steve. Look, we are really keen to make sure we're constantly adapting our offering to help established SMEs and their introducers. And that's driven by regular feedback that we seek from our brokers and our customers. So some great changes that we're announcing. So first of all, we've cut our rates by 0.25 across all owner-occupied and semi-commercial investment mortgages, which is a huge win for affordability. And we've also reduced our specialist buy-to-let pricing by 0.10% as well. Secondly, by taking out the current account, not only does a customer get a fantastic current account with a proactive relationship manager service, they'll also receive 0.25% reduction on their lending rate. It's really important to note as part of this, the savings pot rate associated with the current account will also reduce. We'd love to talk to our introducers and customers more about this. So if anyone is interested, please do reach out directly to me, to your BDM or to your relationship manager. And thirdly, we've loosened our affordability criteria. So we've reduced our stress testing to 1% on base rate linked loans. And we've also changed our semi-commercial price, our semi-commercial debt service to 120%, opening the door to a broader range of SME scenarios. So these changes for us are all about delivering stronger value and wider access and giving brokers more tools to place deals with us confidently.
That's fantastic. And so is that available to all customers, or is there a cut-off limit in terms of the turnover of the trading business?
So it's available to new customers that are coming to us, or for new loan customers that are coming to us. And I believe there's a cut-off of 5 million is the maximum loan size.
So 5 million cut-off, trading businesses only initially, and new customers to bank.
Yes.
Okay, perfect. And then, so we also touched on the fact that there's going to be some discounts on the semi-commercial rate, which is already extremely competitive. So that's a further 0.25 on that, which would take our lowest rate with available discounts to 555. And so in order to ensure further enhancements on the specialist buy-to-let, that's now reduced to 545 at its lowest rate. Is that right?
That's correct. Yes. Yeah.
That's amazing. So the two changes that I would say there for all those that are on the call at the moment is basically, yes, that's going to be a fantastic rate of interest, full stop, all in on a fix for the client. But it's also going to enable further borrowing as well, because the debt service costs are going to be lower. So we're looking at enhanced borrowing opportunities. We're looking at really low rates, plus all the standard levels of service that you know and expect from Allica. So fantastic offering. So Luke, there's some great cuts there to owner-occupied and semi-commercial investment mortgages. Rates are obviously looking fantastic now. What about debt service cover? How have we looked to improve that for the
Absolutely. So we've reduced our stress testing on base rate linked loans. So previously that was 1.5% over base. We've now reduced that down to 1%. So again, giving us a more appropriate stress testing figure. And from a semi-commercial property perspective, we've reduced our debt service cover from 130% now down to 120%. So again, opening the door to a broader range of SME opportunities for us.
That's fantastic. I mean, for those that are hungry for maximum debt, that's going to give us much more opportunity to get as much debt on the table for the brokers to offer their clients. Really puts us right in the mix with all of our competitors. So, yeah, fantastic changes. That's brilliant. I think ultimately these are going to just make us much stronger. They'll give us much wider access to even more propositions, and it gives the brokers more tools to place deals with us more confidently. So we are listening. We consistently appeal to the broker market for feedback, and hopefully this shows that we're listening and trying to improve wherever possible.
Look, we're really keen to talk to as many introducers and customers that we can about these changes. So please do reach out to your RM or your BDM if there's ways that we can support you with this further. We want you to take advantage of this current account discount. It's a great added value for your clients. It gives you a more joined up business banking experience for them, and they can benefit from some of the other features that we talked about earlier. These changes, as you've mentioned before, are really all down to the customer and the introducer feedback. We'd really be delighted to look at any cases that perhaps haven't made it our way because they might have been a touch out on affordability or didn't quite meet the criteria, but now would based on those new criteria we've put in place. We'd love to have another look at those and see how we can help you and your customers. And again, just circling back to your BDM and your RM, we're always really happy to talk through potentially more complex cases or answer any affordability questions or just give you a view on where we feel we might be able to help.
Yeah, I think you touched on a really good point there. I think if there are any cases, as Luke said, that we've just been slightly out on in terms of debt service, the amount of debt that we can get from the loan, or the rate was just slightly out. If we could get back in there and reapproach, we'd love the opportunity. Please give us your feedback on it as well. We're really interested to hear from you guys as to what you think of the changes, and hopefully look at as many proposals for you as possible. BDMs are there. We've got regional coverage. If you don't know who your BDM is, please reach out to me directly, stephen.spinks@allica.bank, and I can get someone in touch with you ASAP. But Luke, thank you ever so much for summarising that. Some really exciting launches there. And I think with the debt service changes and the lower rates, our offering just goes from strength to strength. And I really do think that the current account will be a lovely dovetail for those trading businesses that have just lost touch of their old school banks that just don't really get in touch with them anymore. We look to replicate the kind of relationships that we have with you as brokers with our banking team, and it's a real great opportunity to look at both of those in one go. So if we could be of any help, please reach out. But thank you ever so much for your time, and we'll see you on the next Allica Brokercast.
Thanks all.
Thank you.